Hey, we're live. Thank you so much for joining me. I'm Mitch Goldberg. You're watching Be the Boss of Your Money. This is my live stream. If you haven't noticed, it's very important to me, and I'm so glad you take the time to watch. I love sharing the knowledge, the day's insights, the day's happenings. And what we want to do is we want to put this together in a way that makes the whole day, everything makes sense to you. That, the market, the latest in personal finance, the oldest in personal finance, because just because something's the latest doesn't mean it's the best. Tried and true is something that it's tried and true for a reason, so we don't veer too far off that. Although I always want to make sure we're not missing anything. So you're watching the show today. We're going to talk about a couple of things, but we're going to talk about oil up, natural gas down, Doge Coin pops. Don't worry, didn't go back to 75 cents, okay? China, Russia currency, I think that's just a bunch of BS. And let's roll the intro. We're going to get into all these cool things right now. While you're watching, if you don't mind, give us a thumbs up, a heart, an applause, or whatever reaction is available to you, depending on which social media platform you're watching on. I love hearing from you. Ask your questions in the comments. Words of encouragement are always appreciated. Or if you just want to say hi, let me know where you're watching from. That would be cool too. But let me know you're out there. That's like half the fun. Don't take away the fun. It's a short week. I'm only going to do this today and tomorrow, and then it's Passover. We're off on Good Friday. The stock market's closed on Good Friday, while the bond market is open. So we're going to roll the intro, and yay, here we go. All right, thank you for joining us. We're just getting started. If you're just joining us, you haven't missed a thing. First thing I want to get into is oil. Price of oil. Oil spiked toward the high end of its trading range. I've been talking to you about oil now for, we always talk about oil, but it's been trading between like 72 and 82. That's been the range. And the thing is, it went down to like 66, 67 when we started getting into the bank crisis, when Silicon Valley and Signature banks were put out of their misery. So it did break out of its low, and here we are 2 weeks later. It looks like it's going to break out of the high point of its trading range, because a consortium of OPEC nations, not all OPEC nations, but a few, the big Middle East producers, Saudi Arabia and Kuwait in particular, agreed to take off about 1.5 million barrels, about 1 million barrels per day off the market. It spiked oil. Oil did not close at its high price of the day, but it's up enough to get all the oil stocks certainly going up, and that was the best, the biggest winners of the day are all oil stocks. This is another reason why it's important to be diversified and have oil stocks, okay? Not to just get rid of them and trade them all at once. Now, you can't invest directly into an index, but you can invest into a security that tracks your mimics an index. But anyway, regardless of what's been going on, if you were just investing in broad-based averages, exchange-traded funds that follow passive benchmarks, you wouldn't really know about all the volatility going up. You just see, the Dow had another good day, which it did have a pretty good day. It had a really good day on Friday. It had a decent day today. So the Dow is just growing by leaps and bounds. Of the major averages, S&P, NASDAQ, and Dow, the Dow is the weakest one, barely up for the year. The quarter just ended Friday. The NASDAQ was up 17% for the quarter that just ended. S&P was up about 7 and change percent. NASDAQ dipped a little bit, but NASDAQ did better by the close of today than it was indicated to do in the open today. All in all, the way the NASDAQ has powered ahead, up 17% year to date, to give a little bit back is really not a big deal. Why to give a little bit back? My reasoning is that Because the price of oil is going up, it's going to make it a little bit harder for the Federal Reserve to cut rates. This means that if interest rates stay a little bit at these levels higher for longer, it's not as good for tech stocks. Tech stocks thrive on low interest rates and falling interest rates. So even though interest rates are steady, well, even wherever interest rates are now, it's 5% on the Fed funds rate. The belief that interest rates are going to go down, that the Fed's going to cut rates, is a very powerful thing for tech stocks. You take away that belief, tech stocks go down, even though short-term interest rates haven't changed a bit. It's the belief system, right? Expectations are everything. All right, so let's take a look at the major averages. Okay, I'm going to share my screen. Put myself in here. Let me get rid of the social media icons. Okay, so the Dow is up 327. It was up 415 on Friday. So, 745 points in the 2 days. NASDAQ was off a drop, was off 0.27%. This is not a big deal, not a big number. S&P was up a drop, up 15. Again, not a particularly big deal. Gold finally breaks through 2,000. Okay, see that it's right on the nose, 2,090 cents. See that 2,090 cents right there. Oil, here's the big mover of the day. 492, up 6.5%. 10-year yield comes down, though. So the 10-year yield is going down. That means mortgage rates are going to go down. By the way, existing home sales had a nice pop in the last couple of weeks because interest rates were down just a little bit. If we could see mortgage rates get below 6%, very, very possible, we would really see we would really see a nice spike in existing home sales. Okay, the VIX below 19. I mean, this is basically telling you that the smart money big investors are really not betting on any major calamities coming up. Everyone's expecting things to be pretty calm, almost like a complacency. Then again, the market's earned a little complacency because if you look at everything that's been thrown at the market, the bank crisis, the 1-year anniversary of the war in Ukraine, worsening relations with China. They had that satellite balloon thingy going over, which turns out collected a lot more data about sensitive information from our military installations than expected. A lot of bad things going on, but the economy is doing okay. This is a big week, not just because it's the first week of April. April is typically the strongest month of the year for the stock market. But on Friday, even though it's Good Friday and the stock market's closed, the bond market is open, we get the non-farm payroll numbers for March, the latest employment report. And what we keep seeing is the labor market's doing better than expected. What we need to see is the labor market weakening a little bit. Unemployment rate going up a little bit. New job creation going down a little bit. That's what we need to get a sense that the Fed could be at its end of its rate hiking cycle. That is the confirmation we need for the market to really prove that this rally it's been on in the last 2.5 weeks is here to stay. Now, March 8th is when we started getting mumblings of Silicon Valley Bank falling apart. By Friday, it was closed and taken over by FDIC. That's March 10th. And the stock market's been in rally mode ever since. Okay. Bank stocks have not fully recovered, but they've recovered a good amount. We talk about the bank, regional bank shares, ETFs, and different ways to get into the banks. So hopefully you had some cash left over. You watched the show. Maybe you put some away. If you want to reach out to me, by the way, about to have a one-on-one conversation, if these moves are good for you, the things we're talking about, if they're good for you, or what could be good for you, what should be your next move, you are welcome to call me. You can check me out at clientfirststrategy.com or send me a DM or an email, and we'll set up a time to talk. It's very simple. I don't bite. I'm just here to talk and make friends. And if you decide that I should be a financial advisor, or if you already are, thank you. If you need a new one, then that's something we definitely should talk about. But what I want to do right this second is take a look at oil. And let's push this up here. Put myself up in the corner. This is oil in the last year. 120 the barrel. Okay, in June of 2022. If you remember, last spring, oil was in the hundreds. It was over $100 a barrel. And it's come all the way down. This was right here with the bank debacle to 66, and it's recovered to 80. It's pretty volatile, but you see this, it's tough to see this because it makes that line, but you see this line over here? I'm going over this line here. Oil has got to break solidly above 83, 82. And then the next move is this one over here, which is 92. We'll see if it gets there. Or if you go by this, oil broke its trend. But because what Saudi, what OPEC is doing, we'll see if it could break the uptrend. And this is what is constantly going on with it. Oh, but Menley, I see you out there. Thank you so much for joining me. And okay, so it's enough about that. Everything uses oil, so we'll see. The rising oil price could make the job harder for central banks because it's inflationary. And now central banks could interpret that as saying, well, it's inflationary, but it's a supply issue, and there's nothing we could do about it. So why raise rates and make people even more miserable? Let's just leave rates at the high rates that they're at now and just see how that works. Natural gas was down again, down over 4%, but it's $2 per 1,000 cubic feet, and it was recently 9. So oil, natural gas continues to get hit. So even though you see oil go up, most houses are fueled, I should say, or heated using, and air conditioning is gas. So this is a big thing. So I don't think it's all doom and gloom. The price of the pump might go up, but your utility bill could go down. All right, so let's not make it all doom and gloom. Doge Coin jumps over 30% after Musk changes Twitter logo to image of Shiba Inu. I think it's an idiot thing to do. I think it makes Elon Musk. It just questions me about what he's trying to do. I guess he owns Doge Coin, so he wants to get the coin going. But Dogecoin was started as a joke between friends. Musk touts it on Saturday Night Live like 2 years ago. It pops up from like 15 cents to 75 cents. People followed him into it. He said, I'll take Dogecoin. You could sell, he'll take it for a Tesla, whatever. It went all the way down to 6 cents. Now it's like 9 cents. So it's not like it's flying high. It went from like 6 to 9 cents. No, not like 7 to 9 cents. Not a huge deal. But when you have penny stocks or penny coins, a penny or two is a big deal, and it gets people's attention. The fact that we're talking about it gets even more attention. Unfortunately, we're talking about it, but, it is a headline. So, why not? All right. So the last thing we're going to talk about is the currency. People, there's this thing going around about the BRICS. BRICS is an acronym for Brazil, Russia, India, China, and South Africa. And there's this conversation going around that, the BRICS nations are looking to start their own currency block, kind of like the euro. And they want to usurp the reserve status of the US dollar. They want more trading to be in this special currency. I think it's a bunch of BS. The word of this is put out by Russia. It's probably propaganda for their own domestic consumption because they're always trying to tell their citizenry how great things are going and everything's fine. Look how good our economy is. It's not the case. The other thing is China is not going into a new currency and then take orders from a new administrator or authority on what China could and could not do with their economic and social policies based on what the central bank of this new currency would say, kind of like the euro. I remember when the euro came about, that was going to be such competition to the dollar. It was going to be bad for the dollar. People were afraid of it. And, looking back, nobody even remembers those worries. Before the euro, Germany had the Deutschmark, France had the French franc. Swiss always has, it currently has a Swiss franc like it did back then. Italy had the drachma. Italy had the lira. Greece had the drachma. And there were a few other currencies. I forget I think the Spain had the peseta. I forget exactly what their home currencies were. But these countries all now use the euro, and they have to take their marching orders regarding economic policies and business policies and tax policies from the European Central Bank. I don't think China gives up control to some small consortium of members of a common currency of whose economies are tiny compared to China's. China has a big economy, but it is a very troubled economy right now, very based on real estate and construction and government spending. Our economy is over 70% based on consumption, not on government. Yes, I know you could intertwine them a lot, but we're just talking some facts here, okay? I don't buy it. And as far as other currencies trying to get other countries to use a different currency to buy and sell oil, because oil is priced in dollars globally. If oil is not all priced in dollars, it's not that big of a deal anymore. There's a reason why the United States is overseeing the seven seas a little bit less, especially the Middle East. And there's a reason why countries are starting to draw different alliances. The U.S. is just not as dependent on oil as it used to be. So we can pull back from different parts of the country, and it's changing the whole world order. That's a much bigger deal. But this talk about some currency with the BRICS nations, it doesn't change a thing. It doesn't challenge the U.S. economy. It doesn't challenge our currency. And we will just march right past this. Wasn't crypto supposed to challenge U.S. currency and bring all developed nations to their knees because of crypto? I think there's so much hyperbole in this stuff. It's unbelievable. We just have to be cool about it and just follow our personal finance. Don't get overly excited. Be careful about your spending. Be very, very deliberate about your expense cutting, about your savings, about your investing. Be deliberate about that, and you'll be fine. Right? Thanks so much for watching. I will be back tomorrow on the live stream. I will be out for Passover Wednesday night and Thursday night. I typically don't do the show on Fridays anyway, but I do have a radio show you could listen to on Friday. I have a radio show every morning, Monday through Friday, called Money in the Morning with Mitch Goldberg on the LI News radio app. Or if you're local in Suffolk County on Long Island, you could check it out at 103.9 FM live. I go on at 9:07 a.m. exactly, and I'm off at 9:30, and I'm having so much fun with it, and I'm getting a great response from the audience, and I appreciate everybody who takes the time. Anyway, have yourselves a great day. I'm going to take care of a few things and shut down for the day. Good night.